Welcome to Framework Fortune. I'm your host Ben, and in this video I'm going to go over a particular stock, CHK, Chesapeake Energy, because of the overwhelming everyday occurrence that has happened basically the past month and a half or 2 months. I don't even know, but it's been almost every single day that a new trader has come into the live streams and asked about this stock, or said that this stock is a great buy or a sleeping rocket, whatever you want to call it. To me, this stock is trash, and I'm going to tell you why in this video. And before we get into all that, I'm going to give a shout out to Steven Crowder, as I did use his Change My Mind ideology for the thumbnail of this video. So, in spirit of Steven Crowder and his Change My Mind show, if you think this stock is actually good and you disagree with me, then go ahead and back your argument up in the comments below. So without any further ado, let's get into it and check this out. So right away you can see the downtrend. It did have a pop right here, but it's still on a downtrend. Still on a downtrend. So on the year, it's on the downtrend. It's pretty far below that. So let's go to the max chart and let's see how far back this downtrend goes. Looky here. So the downtrend starts somewhere back here in 2008 and has been continually trending down this entire time. So it is in a 12-year downtrend. 12 years. 12 years this stock has not changed the direction that it is going. Now I know you may be looking at this and saying, well, what about right through here? Yes, it did have a big sell-off. It did start making a move up, but it never got back above the downtrend line. No matter where you draw the trend line at, whether you draw it here or there, it doesn't matter. It's pointing down. So it did get a little reversal, but still in 12 years, the stock has continually moved down. Whether that be because it's a bad stock or because they have been doing stock splits or common offerings, who knows? Because I'm not going to take the time to go back and look. All I need to do is see this chart and see that this stock is pointing in a downtrend over a 12-year span, which is a very long time for a downtrend. Next, you can see they were paying a dividend until 2015. Now, one of the arguments I've heard is because the stock was so low because of coronavirus, it was a buy. They stopped paying a dividend in 2015. The coronavirus was around in 2015. So whatever happened in 2015 that made them stop paying dividends, they have not paid a dividend since then. So in 5-year span, they have not paid any more dividends. Companies pay dividends when they are successful companies. There is some companies that may be, objectively successful, but normally if they stop paying dividends for 5 years, that's not a good thing. Plenty of stocks that didn't pay a dividend during the quarantine lockdown, and now they've paid the dividend afterwards for the current quarter. So maybe it missed one dividend payment. Maybe I could see that. But they have missed 5 years of dividend payments. 5 years. We're not talking about one payment. We're talking about 5 years worth of dividends that they've not been paying out. That shows me probably not a good company. So we've got a massive downtrend. We have a denial and stoppage of dividend payments for 5 years. So far, that's 2 big red flags that this stock is not good. Let's go look at some of the headlines. I have a sneaking suspicion these headlines are not going to be very good. So, right away, let's see. This was actually 6 days ago. Attention to Chesapeake Energy employees. Whoever this is, probably a law firm or a investigation company, something, continues investigation into damages of more than 500,000 something. So let's look at this closer. Okay, sustained by current former employees who held large positions in Chesapeake Energy. Stock at full-service brokerage firms. Investment portfolios holding large positions can carry significant downside risk. These investigations focus on full-service brokerage firms negligence, and failure to supervise the management of large concentrated positions that resulted in investors suffering substantial losses. That's not a very good press release. Let's see what else we got here. 8K shows notified NYSE to commence proceedings to delist, suspend trading, effective June 30th. So in 23 days, Chesapeake Energy is going to be delisted from the NYSE. That means it's going to the OTC stock markets, where Tim Sykes rules as the Satan of the OTC markets. If we look back a little bit further, we can see Chesapeake Energy files for bankruptcy protection to restructure balance sheet and eliminate $7 billion in debt. So let's read into this. Let's see if there's any positivity in this at all, or if it's just is all nonsense. So they will see about a $7 billion of debt eliminated while the shale oil producer continues operations as crude prices skidded this year and demand slumped. The Oklahoma City-based firm said late Sunday it secured $925 million in debtor-in-possession financing as it Chapter 11 process in the U.S. Bankruptcy Court for the Southern District of Texas. The move is designed to facilitate a comprehensive balance sheet restructuring. Okay, they're trying to restructure their balance sheet. Okay. They said they have secured an agreement in principle from certain existing lenders for $2.5 billion in financing after it emerges from bankruptcy process. Okay, they're trying to restructure, but my question is, why did they wait so long to do all this to change their legacy structure that is causing all their issues? Because they've obviously had issues for 12 years. So why are they just now starting to do this? You know, is this enough confidence in the company to be like, okay, well, I'm going to buy in now. Maybe this 12-year downtrend will eventually end. Or is just this their last-ditch effort to be a good company? In 12 years, if you're just now worried about being a good company, probably not a good company. Nothing about this screams I want to put a lot of money into this stock. Even with, I will give you the possibility that maybe after 12 years, the CEO woke up and said, you know what, guys, I think we're running the company terrible. I know we've been in a downtrend for 12 years and nobody's really been investing their money. So I think it's time we change things. Maybe that happened. Maybe he woke up that morning and just had a change of heart after 12 years. It's very possible. But I just don't like it. I wouldn't want to put my money in a company that has this much risk involved, because they're going to be getting into more debt. So even though they're going to clear up their debt that they have, they're getting into more debt as soon as they come out of bankruptcy. So if they've not been responsible with their debt for 12 years, why all of a sudden now are they going to be responsible? They're probably not going to be responsible for it. So just to get a second opinion, I decided to hit up a self-proclaimed guru. This is the Alabama trader, Penny Stock PJ. Tell us your thoughts on CHK.
Chesapeake Energy. What's that? Wasn't it supposed to be one of them hibernating rockets? Huh? Well, CHK, in my opinion, trash, possum food, garbage.
So, there you go, guys. Thank you, PJ. You heard it there, straight from the Alabama trader's self-proclaimed guru's mouth. CHK is trash. That's it for this video. Remember, if you want to debate me on this, or you think that this is a good buy, leave your argument in the comments below. I'm your host, Ben. You've been watching Framework Fortune.